So for the first time in 30 years, you had two Fed governors today, Fed Waller and Fed Bowman, that both dissented, preferring to lower the federal funds rate by 1/4 percentage point today. Now, here in this video, we're going to go over what Jerome Powell just said, how his statements are moving the markets, what to expect next, all of that. We will go over your Tesla stock breaking news, the breaking news coming out on the trade front, with a lot of comments today from Trump, Hassett, and Bessent. And finally, we do have earnings as well as economic data over the next 48 hours that will be important. So we have a lot to cover in a short amount of time. Hit that like button and subscribe to the channel if you have not done so already. Check out the link down below in the description of this video if you would like to come join the trading community. And let's get started. Jerome Powell says, I expect PCE up 2.5% and core up 2.7% in the next 12 months through June. He says that tariffs are pushing up some goods prices. He says that most measures of longer run inflation expectations are consistent with the Fed's goal. He says that tariffs have exerted pressure on some goods, but a wider impact is uncertain. This is one of the most bullish headlines here. Fed Powell says a reasonable base case is a short-lived tariff inflation impact. That's basically green lighting stocks, okay? As much as he possibly could. Powell says he sees the current stance as appropriate to guard against inflation risks. Powell says moderation in growth reflects a slowdown in consumer spending. He then says possible inflationary effects could be more persistent. Powell says on track to wrap up policy review by late summer. Jerome Powell says we have made no decisions about the September meeting. Powell says there is downside risk to the labor market, and he says he would characterize policy as modestly restrictive. Jerome Powell said uncertainty is more or less even since the last meeting. Powell says it has been a very dynamic time for trade negotiations. He says that many uncertainties are left to resolve, and Powell says he feels like there's much more to come. Powell says GDP numbers came in right about where we expected them. Jerome Powell says there are many labor measures that are similar to a year ago. Jerome Powell says demand and supply for workers are coming down at about the same rate. He says that you don't see a weakening in the labor market. And then he says downside to labor markets are certainly apparent. So there's a lot of weird contradictory statements that he's saying. Jerome Powell says the main number you have to look at is the unemployment rate. Powell says a decline in labor supply and demand suggests downside risk. Fed Powell said on the dissents, quote, what you want is a clear explanation, and we had that today. People thought carefully about this and put their positions out there. Fed Powell says economy calls for modestly restrictive stance for now. Fed Powell says you can't point to June projections 6 weeks later, which suggests that things may have changed. And it sounds like a more positive direction in terms of rate cuts. Fed Powell says my own estimate is modestly restrictive, but there are a range of estimates. Fed Powell says we have to think of this as still quite early days in the assessing of the impacts of tariffs. Powell says there are a range of views on what the neutral rate is at this moment, and we'll be making that judgment as we go. Fed Powell on tariffs says it's starting to show up in some consumer prices. We'll have to watch and learn empirically about the process. Again, as I've said before, the Fed has no clue what they are doing. They are incompetent. They are just completely winging it. And that's dangerous. Powell says, we think we have a long way to go to know where we'll be on impact. So basically, this is a long process. Powell says, I expect to see more tariff impacts in inflation data. Powell says the tariff pass-through to prices may be slower than thought. Jerome Powell says, you could say the Fed looked through inflation by not hiking. That's crazy. Powell says there may be some stimulative effect from the tax bill, but not a major one. So some of these headlines from the start of the conference till now sound just really out of touch with reality. I think the markets are picking up on this, and they're saying, what in the F are you even saying, Jerome Powell? Yeah, some of these headlines are really strange. Fed Powell says we don't see the fiscal bill as particularly stimulative, and traders are no longer fully pricing in a Fed rate cut in October. Currently, the markets are still favoring a cut September 17th at 61.3%. The odds of a pause at 38.7%, up about 4% since the start of the Fed conference. October, you're pricing in a continued pause. December, you're pricing in another rate cut still. So believe it or not, based on what Powell is saying, the odds of Fed cuts really are not moving too much. And look at that. A lot of people are picking up on what Powell said here. Again, where he says you could say the Fed is looking through inflation by not hiking. He's kind of sending shots back at Trump saying, hey, you're doing all this to potentially boost inflation. That's not even like a guarantee, okay? Fed is delusional. We need to get new Fed officials in here, okay? But he's kind of throwing shots back at Trump, which is a little problematic because I don't think Trump's going to like what he heard today from Powell, and the conversation of firing Powell could come back up again, and that is a major risk for markets. Fed Powell says services inflation coming down nicely with goods going up. In the meantime, during the Fed conference, U.S. President Donald Trump signed an executive order implementing an additional 40% tariff on Brazil, bringing the total tariff amount to 50%. And then Brazilian officials call some ministers for an emergency meeting on this matter. So to summarize the Fed meeting, there was definitely some comments made that didn't sound great. I think what's sending stocks lower, what is kind of disappointing investors, is simply we were all kind of expecting the Fed was going to cut in September, especially since two Fed officials are openly saying they want to cut rates as soon as possible. And Jerome Powell said, we might not. That's it. He said, it could happen. It might not happen. We're not going to project necessarily what's going to happen with two sets of data between now and September, and basically left it open for interpretation. So that's what's putting pressure on stocks. So I think it's only fair to start your Tesla news with this. Holmar's catalog on X says, think Tesla looks bearish. Institutions don't agree. Tesla currently has a 98% upside score on Prospero, which means it's picking up a lot of bullish activity on the options chain. This is something I have talked about for a while on the channel now, ever since at least Tesla's earnings. We started to get some very bullish inflows from hedge funds and institutions in the option activity, okay? Not as much today, given what's, happening with the Fed meeting and all of that. You have 38 different trades totaling $13.47 million with a positive order value of 47%. Not a lot of activity overall and pretty neutral. Volume today, though, 60.31% calls and 39.69% puts. Hedge funds and institutions over the past couple of days have been bullish in Tesla option activity. You can also see in short positions. Keep in mind, a lot of retail investors do not short stocks. They go out, they'll buy a put if they're bearish, right? What you're looking at here is mainly hedge funds and institutions that back on June 6th had about 3.08% of the free float that was sold short. Today, that's down to 2.53%. So back on June 6th, you had like 86.5 million shares sold short. Today, it's at 71.06 million shares sold short. They've covered a lot, about 15 million shares in the last, month or so, at a time in which retail investors are kind of dropping the ball here. A lot of retail has gotten bearish on Tesla, I think at precisely the wrong time. I think it's the wrong time to now get bearish on Tesla when sentiment and expectations are as low as they are right now. Now, also in the news, GM has just released a teaser for their upcoming all-new generation Bolt EV. Their affordable EV. Production of the Bolt ended in December of 2023. GM is releasing the all-new version in 2026 with more details that will come in a few months. Also in the news today, shorter Tesla robotaxi rides now cost less thanks to dynamic pricing. This is via a new update that people are receiving on the Tesla Robotaxi app. Mercedes has temporarily halted EV orders in the US. The company says it's due to slowing demand and high inventories at dealerships. Nissan is closing its first factory built outside of Japan. Car production will come to an end at the 60-year-old factory by March 2026. Nissan reported a $535 million quarterly loss on Wednesday, hit by U.S. tariffs, restructuring, and lower sales volumes. Here you can see Tesla Chan basically took a robo-taxi ride in Austin, Texas, from one end to the other of the geofenced area, which is about 11 miles long. And it was $13.07. That means you're only paying about $1.25 per mile, which is very attractive pricing, to say the least. Elon Musk yet again reiterated that a $25 trillion valuation is possible on Tesla stock. LG Energy says that they signed a $4.3 billion contract to supply lithium iron phosphate batteries to a customer for energy storage systems over 3 years. That customer is expected to be Tesla. So at the same time, everyone is, more bearish than I've seen retail in a long time. Tesla's out there signing deals. They just signed the Samsung deal. They just got an LG deal. Right? They're just launching Robotaxi in San Francisco and in likely other cities over the next month or two. And now you want to get bearish on Tesla? It seems like horrible timing for any of the bears out there. Also in the news today, we did have the GDP growth rate quarter-over-quarter advanced data for Q3. You came in at 3%. The expectation was 2.4%. So you came in much stronger than expected, but also the ADP employment change, which last month came in at like negative 33,000, kind of spooked people, had people believing that the labor market was slowing down materially. You came in at 104,000. The expectation was 75,000 and the forecast was 20,000. So you basically smashed growth estimates today in the data that came out. Now, pending home sales month over month dropped 0.8%, more than the expected positive 0.3%. And pending home sales year over year came in at negative 2.8%. The estimate was positive 1.5%. So bad real estate data, but really good labor market data and GDP data today. Now, for tomorrow, we're going to have challenger job cuts, core PCE month over month, personal income, and personal spending month over month, which will be important as well. And then on Friday, you have really the big economic catalyst, which is non-farm payrolls and the unemployment rate for July. ISM manufacturing PMIs will be coming out Friday as well. Also have some big earnings over the next 48 hours, specifically today and after hours. Meta, Microsoft, Robinhood, Applied Blockchain or Applied Digital, Carvana, Lam Research, Qualcomm, Kinross, Ford, ARM. Thursday, tomorrow, you have CVS Health, Roblox, AbbVie, Norwegian Cruise Line, Cigna, MasterCard, and some others in pre-market. And then in after hours on Thursday, Apple, Amazon, MicroStrategy, Coinbase, Reddit, Riot, Cloudflare, Roku, and some smaller names. And then Friday, ExxonMobil, Chevron, Regeneron, T. Rowe Price, and Colgate. Also in the news today, Senate Republican leader Thune says we're prepared to move on the Russia sanctions bill if required. Trump says the August 1st tariff deadline won't be extended and says a 25% tariff on India could be coming. And in data today, U.S. existing home sales drop in June to a 9-month low. Hassett on China says ground is set for very positive development. Hassett says that India might cut prices to the U.S. and reconsider practices. Hassett on China trade says Trump will be briefed today. And White House senior advisor Hassett on Canada says there is still hope for progress. And Hassett on India trade says that Trump and U.S. Trade Representative Greer will have more information on additional penalties shortly. Hassett says they're looking at 4% growth for Q3. And apparently Trump thinks that tariffs will help the situation in getting an India trade deal. And on an India trade deal, Hassett says that Trump is frustrated with the progress, or really lack of progress. Hassett says a deal with India will be an absolute game changer for the global economy. And he says that he is hopeful that India will open up its markets for the US. Hassett says, "We at the White House 100% respect the Fed's independence." Hassett says the Fed is very data dependent and expect they will catch up soon. And Hassett says the data this morning shows imported goods prices that actually dropped. And he says the GDP data shows strong growth. China's Wang says that China and the US should avoid conflicts and confrontations. And according to a government source out of India, that said India remains engaged with the US on a trade deal. China's Foreign Minister Wang Yi will meet with US business delegation in Beijing. Wells Fargo raises their S&P 500 price target and GDP forecast. They now have a year-end price target between 6,300 and 6,500, from 5,900 to 6,100 for the end of this year, and a 2026 S&P target that was raised to 6,900 to 7,100, from 6,400 to 6,600. And 2025 US GDP growth forecast increased to 1.3% from previously being at 1%. Trump on Truth Social today said Q2 GDP way better than expected. Quote, "Too late, must now lower the rate." And an India official today says we're engaged with the US for a mutually beneficial deal. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel. Check out that link down below in the description of this video for the trading community if you guys have not done so already. That is the best community in the world. What we do over there is go out and find small cap AI stocks that are being underlooked by the markets. I mean, some of the opportunities I've personally invested in the last 12 months that were like, you know, no-brainers at the time for me was partially due to the markets not understanding the opportunity, right? Nebius, okay, bought that in the $20 range, okay? Today it's in the 50s. Bought IONQ at $7. Today it's in the mid-40s. Bought Applied Digital at $3. Today it's over 10. Bought NVTS, Novartis Semiconductors, around $2.50. Today, it's, you know, $8, $9. And although the last couple of days have been a bit rocky in the portfolio, we are up 74.28% year to date in this portfolio, at least. At one point, we were up 94.5%, but I do think by the end of this year, this portfolio is going to be up well over 100%. So come join us. I know I had a couple people ask to see the actual portfolio performance year to date so far, so there you have it. Actually, you know, last couple of days have been a little on the red side, I think, for most of us as well. With that said, hit the like button again, subscribe to the channel, link down below in the description of this video. Have a great rest of your day, and I will see you in the next one.